All right, let's talk about one of the most exciting, most debated companies on the planet right now, NVIDIA. But we're going to look at it from a slightly different angle, through the lens of a paradox, really, the paradox of its own incredible success. I mean, it's a wild question to even ask, right? NVIDIA seems completely unstoppable. But what if that hype, that insane growth, that sheer size, what if those are the very things that could trip it up? That's the puzzle we're going to dive into. So before we get into the potential dangers, we have to really appreciate just how much of a king NVIDIA has become in this AI world. I mean, think about it. This company is the face of the entire AI revolution. The hardware that's powering this massive technological shift, yep, that's NVIDIA. The hype is absolutely real, and the stock's performance, well, it's been nothing short of staggering. Okay, this number you're seeing, 8%. This is huge. NVIDIA now makes up a massive 8% of the S&P 500. It's gotten so big that it's not just a tech stock anymore. Its performance is basically a macroeconomic event that can send ripples through the entire market. But here's the flip side. That unbelievable success story creates a really dangerous situation, one where even fantastic news might just not be good enough. It really boils down to these 5 things. First off, the bar is just set impossibly high. Investors aren't looking for strong growth, they expect hypergrowth. Second, that amazing AI story, a lot of it is already priced into the stock. Third, even if growth slows from, say, 100% to 30%, that's still amazing, but it can spook the market. Then you've got real-world geopolitical stuff like export restrictions. And finally, its sheer size means if it stumbles, everybody feels it. And this quote just hits the nail on the head. This is the core fear, right? Some analysts are thinking, hey, maybe they've already hit their peak growth rate. And if that's true, even a killer quarter could be seen as a disappointment if it feels like the best days are in the rearview mirror. So this brings us to a really crucial point. If you want to understand the risk here, you can't just read the headlines. You've got to know what to look for inside their earnings report. That's where the real story is told. So the first thing is something called forward guidance. This is just the company's own prediction for what's coming next. For a stock like NVIDIA, believe it or not, what they say is going to happen next quarter often matters way more to investors than the incredible numbers they just put up. Next, you have to pop the hood and look at their data center business. This is the absolute engine room of the AI hype. It's the division selling the chips that fuel the entire AI boom. Any little hint that demand is slowing down here, well, that could send shockwaves through the stock. And finally, you have to watch the gross margins. Now, it sounds technical, but all this really means is how much profit are they making on each chip? Are they still incredibly profitable, or is competition starting to chip away at their earnings? See, massive growth is great, but investors demand profitable growth. Okay, so we've talked a lot about the risks. But to be fair, this is definitely not a one-sided story. There are some really powerful arguments for why NVIDIA's rally could still have a long, long way to go. And this slide really lays out that tension perfectly. You've got this tug of war, right? On one side, you have these sky-high expectations and some very real risks. But on the other, you've got this strong belief that the AI revolution is really just getting started, and NVIDIA has built this incredible fortress around its business. The optimists, the bulls, they're arguing that we're just in the first few innings of a tech revolution that could go on for decades. They point to NVIDIA's whole ecosystem. It's not just chips, it's the software too, which makes it super hard for anyone else to compete. Plus, they believe new products are coming that could mean its long-term potential is still being seriously underestimated. So you're left with these two competing stories, right? The massive risk of disappointment versus the incredible long-term promise. How in the world is an investor supposed to think about all this? Now, of course, this is not financial advice, but it is a pretty solid mental playbook. It really starts with knowing yourself. Could you handle seeing the stock drop 20% overnight? Then think about your timeline. Are you in this for next month or for the next 10 years? And please, make sure one stock doesn't become your entire portfolio. Most importantly, have a plan before the news hits. It's always, always better than just reacting to the hype. This quote really captures the feeling, doesn't it? That sense of unstoppable momentum is thrilling for sure. But it also means that when things turn, they can turn really, really fast. That's just the physics of the market. And that brings us all the way back to our central question. Has NVIDIA become a victim of its own success? Has its greatest strength, that mind-blowing momentum, actually become its biggest liability? That's the paradox every single investor has to wrestle with.